For those of you that follow this sector closely and you follow what companies are doing over the last 18 months, you'll see the Sprott name associated with many investments being made across the junior exploration and mineral development sector. Mr. Eric Sprott has been in this industry for many years, starting as a broker many years ago, and operating as a portfolio manager. Today, we call him a professional investor, but I think it's fair to say he's much more than a professional investor. So the idea is that Eric's going to give us a bit of a how-to from a successful track record standpoint, somebody who's been investing in this industry for many, many years. So please help me in welcoming Mr. Eric Sprott.
Good morning, everyone. So I've been in the investment business for 50 years, and I got 20 minutes to explain what I've done over that time, and maybe try to impart some tips to you. And I know how critical ESG is to everybody here, right? Environmental, safety, and governance. I'm going to talk about my own ESG, exploration for silver and gold. What am I trying to impart to you? I'm trying to impart to you things that might help your own work. You have to do your own work. Rarely, if ever, will you get a report from a brokerage company, or maybe even a letter writer. Letter writing is more likely to give you the early shot at it, but a well-explained reason to own something that's not particularly biased. As we all know, the brokers tend to be biased to whatever the hot thing is for that day. So it's really important that everybody does their own work. One of the things that I suggest you have to do is you have to learn to notice things. There are opportunities to notice things if you are doing your own work. So for example, I'll just use today's example, okay? I'm reading about Washington State and a care home where somebody said, you know, the first case was known here on January 19th. And I know this case was the first case in these states. And 4 days later, they decided to do a test. And 4 days later, they got the results of the test. So this person was infected for 8 days. And then they find out that on probably Thursday or Friday, that a second case in Washington, they can tell it's related to the first case. They can tell that. We know that was Jan 16th. We get March 1st today. And the conclusion was that it was circulating for 6 weeks. Okay. Now, you're all aware of the coronavirus situation, and we're all aware of seemingly how inept everybody is in dealing with it and literally protecting us. In fact, I think the worst people for protecting us tend to be the health people, believe it or not, who, oh, it's just a minor risk and this, that, and the other. Now, I'll be willing to bet that on Monday morning, they said that 50 people in this healthcare center are not feeling well, including 25 who work there and 25 who are cared for there. Now, what is going to happen to all of us as investors now if you got 25 cases reported in Washington State? I know we're all in Canada here, but you know the market quite often is determined by what goes on south of us here. And we're already in a very, very difficult situation. And all of you have to be aware that this has happened very quickly, but it was not unnoticeable. So what was I doing 10 trading days ago? For the first time in 7 years, I started shorting the market again. And I thought to myself, how long can this market keep hitting a new high when you already have the examples of the China, the Diamond Princess? I don't know that South Korea was starting, but you could kind of sense it, oh my God, this thing's out of control, and where's it going to go? Now, of course, we do have South Korea, we do have Italy, we do have Iran that obviously is underreporting days. I mean, that's so obvious. You can't have that many deaths already, okay? That's just a statistical thing. And one of the things that I do is I use mathematics and intuition. I'm a chartered accountant, which is a great place to be in the minerals business. Luckily, you know, there's something like 3,700 minerals. 3,700. And I know there's not a person in here who knows them, and nor do I. So in that sense, I'm even. It's very difficult for the average guy to understand these reports that the geologists write and are forced to write. And I suspect that not many people get it, and the beauty of being an accountant is I immediately take a drill hole and convert it to dollars. And then I wonder, well, how many tons of this stuff do we have, and how big can this thing get? I'm not worried about why it got there. I don't really care why it got there. I just want it to be there. And if it's there and I recognize it and I can analyze it, I can be ahead of the game. Just to give you a little history, back in 2000, of course, I was running a hedge fund then, and I was short everything on the board, mostly the US stocks. And why was I doing that? Because what's with these ridiculous valuations of NASDAQ stocks? How can that carry on? So I was short. It seemed obvious to me. In 07, 08, no, I should probably go back to noticing things. And this is probably in 02, something like 02. I'm reading an article in the Wall Street Journal that can't be 2 inches high. 2 inches. And there's a young lady, I presume young, named Amy Butte, who was an analyst, I think at Lehman Brothers. And she was saying, you know, I'm really worried about the stock brokerage companies because they underwrote the bonds of companies like they're called Celex, WorldCom, and other people like that, and they're not doing very well, okay? Now, how's that valuable to a guy sitting in Toronto? Well, I thought to myself, I know those companies, WorldCom and all the other Celex, and I know that who was selling them the goods. Nortel. Nortel was selling goods to these companies that she was worried were going broke. And if the brokers would suffer because the bonds would be no good. I thought, oh my God, Nortel's got to be a short here. It was a very tough thing to talk about at the time. I remember going down to Ottawa from Carleton University, and some guy asked me, well, what do you think of Nortel? I said, well, I think Nortel's a short. I mean, you want to hear a room go quiet? It was incredible. In 07, 08, the market, it was easy to know what was going to happen. Luckily, we have websites now where everything is revealed pretty well. There was a one called housingbubblblog.com. You know what they were going to talk about. And what were we going through? We were going through a housing bubble, and every day, here are the articles, boom, 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 boom. And all the articles about, how all the bartenders in Miami were buying 5 condos each. Now, if you didn't know that was loony, then you just weren't thinking. And back in 09, you find this data point shocking. I bought the following companies for $1 a share. Citigroup, Fannie Mae, Ford, GM, and Freddie Mac. $1. I was short those stocks. I was buying them back at $1. Thank you very much. And there's another message in that dollar, by the way, and I know everyone here has already forgotten that Citigroup was at $1 and Fannie was at $1. Because those companies were broke. That's why their stocks were at $1, because they were broke. They weren't allowed to go broke. But trust me, they were broke. And now we've come along since, and we have this stock market that seems to repeatedly want to go to new highs all the time. I've been most reluctant to get involved in the stock market. I am very much involved in gold and silver because I think they're an antidote to massive irresponsibility of 0 and negative interest rates. As I look at this crowd, I see people who've gone to university. You've never in your life read about negative interest rates, okay? Never have you read about it. But we are in it. And we all know it makes no sense. But you know what? We play along until something happens. And something might have happened. You know, we had a pretty good rout last week, notwithstanding the late recovery on Friday. And if this coronavirus continues to spread at the rate seemingly is spreading at, and you even have, you know, the World Health Organization talking about a pandemic, possible pandemic, we as investors, you're gonna look at that and say, okay, what's the worst case situation that could happen here? What's the worst case situation? Well, the worst case situation is exactly what happened in China, where the car sales in February were down 92%. Okay? We're not trying to figure out whether GDP is going to be 6 or 3. It was down 92%. You got 500 million people stuck in buildings, not doing their normal thing. Have you imagined maybe you'll be stuck in a building soon? No, you haven't. Of course you haven't. But that's actually proven to be the one way they can resolve this. You just say, okay, nobody can do anything. God forbid they tried to do that here. We all gotta sit in our homes for 2 and 3 and maybe 6 weeks now, the recent example. I've been a pretty successful investor, and I want to point out some of the things that I think are important for the average investor. And the first thing is to be skeptical. It's just not laid out for you, okay? That's not the way it works. I mean, yeah, they'll lay it out for you. If it seems to come easy, you know what? It's not gonna work. So not only do you have to do your own work, and I mean serious work, but you have to be a skeptic going in. It's not just rose-colored glasses here, okay? The first thing I would say, if you want to make money, I know that most people don't, but if you want to make money, you gotta buy small stocks. I can give you my most recent example, okay? So I was a big shareholder of a company called Kirkland Lake Gold that probably 4 or 5 years ago traded at $2 a share and went to 66. And at the same time, that great company, American Barrick, went from 50 to 25. The big one. And all the other big ones did too. You don't want to own the big stocks. You want to look at up and coming things. So the first thing I look for is I prefer a company to be small. And when I say small, I'm talking about the market cap, not the share price, okay? Everything's market worth that the market's giving to it versus what you think the opportunity is. So what are some of the things I look for? You look at a company and you find out that nobody on Bay or Wall Street follows it. Check mark. I don't want anybody to follow it. I'll do the following, thank you very much. I don't want people to follow it. I want to be the first one to find it. I'll go tell the guy in Bay Street what I think it might be worth, and then he can follow it. But that's after we've all invested though. This is going to sound like a strange one, but one of the other things you want is questionable management. I know it's a weird way of saying it, but how can you want questionable management? Because the guy questioning it has probably overreacted to something, okay? And I'm sort of reminded of the case, and this was back in 2000, when there was a particular guy, I'm not even going to mention his name, very, very, very well known. He wasn't that well thought of at that moment in time, okay? But I was looking at his company, man, this looks like a really good deposit. And notwithstanding what people think about this gentleman, I think they're wrong. And I bought that stock, and 2 years later, that man in the mining business was the mining man of the year. My, how things change. But it sets up an opportunity for you that if everyone thinks it's not working, that stock's gonna be cheaper than it should be. You also, when you're dealing in mining stocks, while I'm on management, you know, it's more important to have a good ore body than good management. I know that sounds like a shocking thing to say. You can have the best management in the world. What if you don't have the ore body? Now what are you gonna do? It's the ore body that counts. And a lot of times, case in point, you get lucky on things. You know, you sort of, you smell an ore body getting better, and all of a sudden it gets better, lucky or not. And one of the key things in investing is press the bet. I probably have more stocks I lose on than stocks I make on. But when I make on them, I do well. And I'm always looking for stock that can go up by 10 times. I don't want a stock that's going up 2 times in 2 years. I know it sounds wonderful. But I prefer 10, you know, I'll take 5. I'll take 7, I'll take 3. But if you set your targets too low, you know that most things don't get to where you think they're gonna get to. So you may as well at least have a target that's up there. The other thing you look for in a stock is some kind of new development. Like, why am I looking at this today? Typically, it's a drill hole. It might be a new investor. It might be some new theory as to how they're going to get some mineral out of the ground. It might be the performance of the mineral. So, for example, palladium, which has skyrocketed here in the last little while. I finally bought some palladium, even though I don't at all pretend to be an expert on the palladium market. But, you know, 2,600, everybody in the palladium business is going to make money, so I'll take a shot at it. The other thing, another thing I look at for a company is that a little bit of money transitions the company. So in other words, let's say I'm looking at a 10 million market cap company. Now, and you're not in the position I am, but I might say, you know, if I put 3 million in that thing, that would just transition that company. Because everyone's in fear, everyone hates the management, everyone thinks the ore body sucks. And you've kind of done your own work that it looks like it holds together, and I'm gonna go for it. So, but I'm always looking for an outsized return. And believe me, I've had, I don't know, 20 stocks that have gone up by 10 times, easy, 20. And I probably had 100 that have gone down 50. I like the math, okay? I like the 10 baggers. Because while it's going up, you're pressing the bet all the time, because you recognize that it's come together. I also, of course, look at because I'm a chartered accountant, I will look at the financial statement, see if the financial statement's telling me something, like warning signs or not warning signs. And hopefully you can do that. There's a certain sense of skill level that you need. The next important thing for me is what I call the call. I'm going to call the management. And in the old days, I used to invest in companies that had good earnings. So you'd see a good earnings report. Back in the old days, the Globe would print out all the reported earnings, and I'd go through it, and I'd look at somebody, oh my God, he earned 22 cents up from 2. Well, that got me going. And I love nothing better than phoning the management up. I see the 22 cents up from 2, and I said, well, obviously, that's not repeatable, is it? You always put him a little off guard, because he's kind of pissed off at you now. You think I'm an idiot, and then he'll go and explain why he's going to do better next quarter. And that's exactly what you wanted to hear. You ain't seen nothing yet, baby. And so the call is very important to the management. And the same applies to an ore body. Like, can you tell me why you think this is connected? Now, I'm just a chartered accountant, so keep it simple, okay? And if he can explain to me in a sufficient way that it's likely to work, and the stock's inexpensive, nobody follows it, I like that. I'll take a shot at something like that. And everyone can make that call, whether maybe you can't get through to the CEO, but boy, I suspect you can get to the CFO or the investor relations guy, or have somebody phone who can get there. What else do I want to mention here? I sort of really talked about this already, but the accountant versus the geo. I mean, I really do believe you have to learn to monetize a great drill hole. It's just, you know, well, 1 ounce gold's worth $1,600 a ton, and you know the guy's cost is gonna be whatever. I would venture to say if he's got high grade gold like that, it'll be like $600 or $700. Guy's gonna make $1,000 profit per ton. Who makes $1,000? Who makes those margins? You make them in the mineral area. You do. When you have a good property, you make outsized margins. And so, for example, when I talk about Kirkland Lake today would be in the top 40 companies in Canada in earnings. Top 40 companies. They were nowhere 3 years ago. Like nowhere. But you know, you find an ore body with high grades, you start developing it, things change fast. They announced they might do a buyback of $1 billion buyback. And they almost have $1 billion in the bank, if you can imagine, from nowhere. So that's the sort of things that I do. I want to run with the winners. You always want to be watching what's going on around you. That whole macro that can affect return. So for example, Kirkland was very weak because the gold price got killed on Friday. And you know that this can happen. You have to be aware that this sort of thing can happen. It's not just clear sailing all the time. My own view is that the possibility of the pandemic is very high now. I just find it very, very high. There's too many countries where it's exploded, whether it's Germany, France, Italy, South Korea, Iran. I wouldn't be surprised we'll find the US right in there within the next few days. Then everyone will be thinking differently. The last thing I'm going to say or mention, I happened to do an interview just before I came in here. There's a group called Save Canadian Mining. I'm a passive supporter of it. There was a rule in trading called they used to have something called the uptick rule, where if you wanted to short a stock, it had to be going up. And in 2012, they got rid of the uptick rule. And I think it's been devastating for small mining companies. Because you're talking about a room full of computers like this, okay? There's a room full of computers trading every damn stock out there and front running them and smashing the hell out of them if they want to. Smashing the hell out of them. Just knock it down, knock it down. When you see some of these junior stocks getting hammered like they are, no owner would sell something like that. That's a guy who wants the price down. So I've lent my support to Save Canadian Mining, and I hope that some people here might consider signing up with them. They're also looking for donations. So that's about it for my informal comments. If anybody has any questions, I'll try to answer them.
Thank you very much, Eric, and please help me in thanking Eric for providing. So as mentioned, there are a few minutes for questions. I would ask anybody that has a question to please move up towards the microphone just so that the rest of the room can hear.
It looks like we're in a bear market now for general stocks. How much do you think gold stocks can go down in this first phase?
Well, that's a great question. They're stocks. They're stocks. We have liquidity issues. In fact, I guess my worry right now, right this moment, we better not get some bad news in the States on the coronavirus. We're already, I don't know what we're down from the top of the world. That's something like 15%, are we down 15% in no time? There are a lot of levered people out there, like a lot of levered people, and or levered computers, which is plenty of levered computers. And all of a sudden, you get margin calls. And that would be my fear. I don't want to suggest we're likely hitting a bottom, we're all smart enough to read the events that are going on here. But I think when you make your assessment of are we at a bottom, you better make sure the word pandemic is not being used. Because in a pandemic, first of all, we wouldn't even be here. I'm almost surprised that the show went on, actually. I think it made it by about a week. That's the biggest concern, and it's very difficult for me to say to you one way or another the exact extent of it all, but I don't think it would be a little item if it carries on. It would be a very, very, very big economic item, and you have a lot of companies and individuals. Think of the 500 million people in China that aren't working. Now, did they get a paycheck? Yes, let's say they got a paycheck. Well, who wrote the check? Which company wrote the check to the 500 million people that he's going broke now because he didn't sell anything? Somebody's going broke over this. Somebody. So we have to stand by that, but it's a great question.
Great presentation. Thank you. This has been called the everything bubble the last 10 years. And there's been a lot of talk that this virus is the prick that's going to pop the everything bubble. Can the Fed really paper this over one more time?
That's a very good question. And my own belief is that fiscal and monetary policies aren't nearly going to have the same impact in this environment, because we're looking after ourselves here, okay? Like, what are we all going to do if this thing takes hold? Which we will continue to monitor, okay? I spend more time monitoring coronavirus today than I do looking at gold and silver stocks. I kid you not, because it's the elephant in the room. So I better kind of understand it. I don't think that the Fed can say we're going to cut rates. The market, other than for the first half hour, would give two hoots. I don't know what's it going to do. I mean, interest rates are almost nothing anyway. So anyway, I don't think they will have the muscle to make any difference this time.
Is there the possibility that rates could actually increase?
The question was, is there a possibility that rates could increase? And I must confess, there's a couple of things I haven't done because I've been so busy. But I heard even this morning that lesser quality corporate credits have kind of got bombed out this last week. So that means rates went higher for that category of bond. And maybe it's a tip-off, that people realize, hey, all these companies, their business could be turned into shreds here. Why do I own their debt? I know why I own the government debt, because they're just going to print the money anyway. So, and I haven't watched the futures recently because I'm so tied up in other things. But the repos got out of whack there, whatever it was, 6 months ago. That's something that I will get around to when I'm comfortable that I fully understand the coronavirus, which is the bigger item. But there are signs of weakness in certain segments of the bond market already. Yes, sir.
Yes. If the coronavirus is deemed a pandemic, like how low do you think gold will go? And also, if you are invested in the precious metals equities like gold and silver companies, how would you hedge?
Well, I know how I'm trying to hedge. As I said, I started shorting 2 weeks ago. And so I decided, well, I'll short the S&P futures. They're pretty levered. The shorts I put on 2 weeks ago are up 400% already, and I know nothing about what I'm doing. Okay? I just got lucky again. But I wanted to have a bit of a bet on in case some things happen that were working against me, like gold stocks going down, or gold going down for that matter. Do I continue to think that gold would go down? As long as there's some semblance of a financial market going on, I would think that people would see the logic of gold over anything else. Ergo, it would be more inclined to hold itself. And whether that's central banks, because they've been a big factor in the market, big pension funds, I think there's more reason to think that it's a safe bet. And it's always been a safe bet in 00 when the market crashed. That's the first time I got involved in gold and silver. I said, man, I just want to own something that's going to stay there. I don't want to lose money. And lo and behold, it goes from $250 to $1,900. That was getting lucky, okay? I don't know if that'll happen this time, but I think there's good odds that gold will outperform other vehicles.
Eric, if I may ask, do you see any parallels to 2008? When the market started to fall apart in 2008, we did see gold and silver prices falling along with the general marketplace for a few months, and then lo and behold, they heel turn. Do you see any parallels?
Well, one of the things I also watch for is, there's got to be something, there's got to be fallout when you have the kind of decline in prices we have. I know, about these hedge funds that are so levered. Well, how can a guy that's that levered and has equities go down 15% in like 7 trading days, and he's levered, how's he doing here? Well, how's his banker treating him? That's probably the better question. How's his banker treating him? Is he calling the loans and making the guy, turning him into a seller or not? And you would think that we'll start seeing some of that here soon. And maybe we already are. Maybe some of that selling that happened on Thursday and Friday was already the bank putting the gun to some guy's head that I don't know about. And of course, you never know about it till later. So.
Time for one more.
Hi, Eric. Just wondering, with all of the risk and the fluidity of what's happening in the current environment, how do you determine when to step up and buy? Or what is that point?
That's a very difficult question, young man.
Yeah.
Well, I don't know. You gotta sense value, right? You're sensing some value. Like, why is that? That stock can't be that cheap in almost any circumstance, whatever that circumstance is. Like, you take the circumstance you have that day, which are of course changing every day, and you finally say, I think it's just gone too far. Or you recognize that there's indiscriminate selling, that sort of thing. Now, I don't think we're there yet, but we might see some crazy things happening. So, and it's just a feel you're going to have. I mean, look, I hadn't shorted in 6 years. Why did I short 2 weeks ago? Well, the market's hitting a new high, and we got this pandemic going on. What am I missing here? And as it turned out, it got worse because you could see by analyzing the numbers how explosive it was. So, okay, thank you all very much. Oh.
What would happen if your company gets the virus?
If the company gets the virus, well, the company is the people that work there, which would be me, and I would hope to survive it. I think I'm fair in saying that the death rate to me seems to be around somewhere between 2% and 4% from the work I've done. It's not so good for guys my age, like 75, and it's pretty good for you, young lad. You're not likely to have a problem with it. But all you can do is try to boost your immune system, stay away from people, don't make presentations in front of a whole crowd that you don't know where the hell they came from. That's my advice. Good question, thank you.
Thank you very much. So thank you.